Good afternoon. This is the video newsletter for buysellshort.com for Monday, February 15th. US and Asian markets closed today, so we don't really have a whole lot of um, help going into tomorrow's market regarding direction. European markets did close up slightly on the day, so that is a mild positive there. We still have the sovereign debt issue swirling around, of course, with Greece. We have the full membership, I think 27 countries of the EU meeting tomorrow to hash out the Greek bailout. So all eyes remain on that, and that is essentially what's moving the market up and down right now and keeping the fear levels pretty high and a lot of the speculative money on the sidelines. One positive note, the yield spreads between German and Greek bonds have tightened, which is considered a positive thing. So that is one thing to look forward to. And there's also Dubai jumping back into the news this weekend. Supposedly, they have offered 60 cents on the dollar to their debtors with full backing by Dubai. So people are arguing that that's bearish, but 60 cents on the dollar when you were looking at getting 0 cents on the dollar there a few weeks ago is probably a good thing, in my opinion. What's going to continue to move the market, of course, keep a close eye on the euro and the dollar. Euro weakness possibly tomorrow. It's all going to be on what the euro does tomorrow, whether we see a pretty big pop. We need a deal to be announced and for the dollar to sell off because right now the dollar strength is killing commodities and, of course, killing stocks and keeping everyone on the sidelines. Looking at the Dow 15-minute chart here, you can see late on Friday we got another golden cross on the 15-minute time frame. You'll remember 2 weeks ago we had a golden cross, we had a slight pop and then a failure. So we really need to see this come through. I don't believe we've had a double golden cross failure in a long time. And going off the average gain, usually on a golden cross, we'd be looking to a move to the upper resistance level of this bearish rising wedge at around 270, 275 on the Dow. Looking at the daily chart, you can see here on the daily chart, we have met resistance right here at the upper limit of the bullish falling wedge we see on the daily chart. We need to get above the 20-day exponential. That's at 10,195 to consider this a real bottom in the Dow. One positive note, we're about to get a positive MACD cross on the Dow daily chart, which has typically occurred right about this time frame on a recovery after a sell-off. So, we need that. We need to see that early this week. Stochastics have breached up through the 50 level, so the charts are ready for a big move either way. We're hoping the big move is up. If we see a failure here, we're looking at a retest of the 9,700 area if we're unable to break out through this 10,200 area early this week. Again, gold stocks look like they're possibly bottomed. The gold was up today with the euro being flats, but all eyes are going to be on what the euro and dollar do tomorrow. And if we do see the dollar sell off, then we could see some very nice plays in the gold stocks. One pillar of strength, however, has been the tech sector. Led the market the last few days. Very strong again on Friday, led by the semiconductor index, which has broken out of its bullish falling wedge now, was able to break up through the 20-day exponential and now has eyes on the 50-day moving average. RSI about to break 50. You can see we got that positive MACD cross and some nice follow through. We're about to get a positive ADX cross. Stochastics, very nice. On balance volume, very nice. And this is the one very positive thing in this market right now. Tech started the sell off back there in early January with the Intel earnings report, and now techs are finally starting to show their leadership. And that is usually what happens. Techs usually lead the market down and then lead us back up out of the trough, and that's what we're seeing right now, and that's why we've got some very positive signs there. We'll have a better idea in the next couple of days whether this holds true. But let's jump into some stock plays. We've got the fifth annual stem cell conference starting on Tuesday for the next couple of days. So we've got a couple of nice little stem cell plays here. PSTI, very nice chart bottom here. any kind of momentum or volume, and we should see an easy move to $1.35, $1.25 to $1.35 is our target. This stock has been pretty stable in a pretty tight range over the last month or so. Stochastics nicely oversold, and as you can see on bounce volume, it just continues to get accumulated slowly while the stock remains in this pretty tight trading range. So any sort of positive news out of that stem cell conference tomorrow, and we could see a very nice pop in this one. Another stem cell play. These guys aren't presenting tomorrow, but when stem cell stocks move, they always come after the stock that's named after its stem. Breakout now is a move through $1.25 with $1.35 and 40 targets on this. And again, stops would probably keep my stops $1.18 on this one. If it doesn't pop tomorrow, would look to exit positions here. New biotech play, ETRM. This is one we've played quite successfully for some nice pops over the last few months. Had that massive spike there in mid-January when the biotechs were just going on fire. They announced the financing and it's been down since. Stock has put in a very nice bottom here in the low 50s, 52 cent support. Breakout is the 20-day exponential at 59 cents, and we're looking for a move to 75 cents on this one. So we've got small downside risk and pretty nice upside risk, making it for a very nice risk-reward trade in this going into this week, especially seeing as other than techs, biotechs have also been the one sector that has seen components popping all over the place. RSI, or stochastics, I'm sorry, nicely oversold. ADX has remained very, very strong throughout this retrace, which is always a positive on a setup like this. And when this stock goes, it's going to go like this. Boom. So hopefully we see that tomorrow/Wednesday. PTN, this is a biotech we've played a few times. We jumped into it on Thursday, 29-cent area, traded as high as 34 cents there on Friday, and then into the close, we had the day traders bailing out, and they were able to walk it down on pretty low volume given the early high volume that took it higher. So we should be looking for a snapback on this one tomorrow in the market. ANX is one we've played quite a few times. Chart looks ready for another one of its big moves. Very tight consolidated chart right now. If you're putting stops in this one, we'll move it slightly higher to 28 cents now. Breakout is 31 cents. We get a close above 31 cents, and we could see a very nice 10 to 20% pop on this one. Again, small downside risk, pretty decent upside risk going into this week. RSI has been holding pretty well. Positive MACD cross very, very soon. And again, we're starting to transition out of these under $1 stocks. We still have a lot of them left, but for the ones that we have left, they've got some nice chart setups, and we're going to stick with them with pretty tight stops. Just one to keep an eye on here, Sirius. We've played it many times. Earnings are in a couple of weeks. Stock is acting like it did back in mid-January here. Right now, it's in no man's land. It's tough to really buy it in this 80 to $1 area. Buy on this one would be a break over $1. If this one breaks over $1, we'd be looking to add to our positions on that. So that's the only reason we'd be sticking this one, sticking an alert on it, a price alert when it gets to 98 cents so that you can start keeping a close eye on this one. ESLR, Evergreen Solar. Again, this is just one to keep an eye on. We're not jumping into it yet, but it possibly has a bottom here. Big sell-off over the last couple of weeks. They announced that they needed to raise financing sometime this year. No real surprise, but stock got smacked down. Solar stocks, the biggies like First Solar, look like they could possibly be bottoming, and this stock could see a snapback of 10 to 15 cents. As you can see, always manages to bounce back to its 20-day exponential after sell-off. So this is one, just to stick on the radars for the next few days to see if this bottom down here at $1.18 holds. Another stock to keep an eye on here is VG Vonage. The reason we're mentioning this one here, they're about to get a positive MACD cross on the chart. The last 4 times that we've seen a positive MACD cross over the last few months, the stock has had a pretty nice spike over the following couple of days. last one taking it from $1.20 to $1.60 in 2 days. So we're about to get a positive MACD cross. Price action over the last couple of days looks pretty solid. If you're got a little bit of risk tolerance right now, you could possibly add a break of $1.50 with stops at $1.45, and your target would be a move to 165. But for the rest of you, keep an eye on this one. Positive MACD cross could be worth a nice little scalp. And for those of you not even trading it, definitely worthwhile just watching it to see how the chart reacts. So that's pretty much it for the video. We'll see how the Euro acts tomorrow, and that'll probably determine where the market goes. But we do have that golden cross. Double failures are pretty rare, and so here's to a nice up day tomorrow. And that's it for the video. See you guys in the chat room tomorrow. Goodbye.